invitation that you and Martha gave for me to give presentation on risk management. So let me just go ahead and share screen. You see it okay?
Yes, sir. We can see it.
Okay. All right. So I'm hoping to get through this presentation in around 45 to 50 minutes and leave around 10 minutes for questions. And Matthew, I mean, I can't see the chat, so I mean, you could monitor the chat for me if you please.
Yes, sir. Yes, sir. I'll monitor it for you.
Yeah. So if there's any questions on the chat, let me know. And then either way, if you have a pressing questions as I go along, let me know. You could interrupt me and we could just try to answer right then and there, or you could wait till the end of the presentation. So, okay, so the presentation today is risk management in challenging times, farmer safety net programs, and crop insurance update. So as I told Matthew, they invited me to talk a little bit about risk management, but the typical thing I present is sort of, the basics of disaster programs, of crop insurance and so forth. But given our situation right now, I decided, well, let's talk a little bit more about sort of the existing safety net programs out there that's came about due to sort of this situation with the pandemic and other stuff that came about in the last year and the last few months, actually. So I'll focus more today, actually, on CFAP2, this Coronavirus Food Assistance Program 2.0. So this is sort of the new program the current administration rolled out. I think they announced it end of September. And so I wanted to talk a little bit about this and how it could help our stakeholders there in Warren County, Franklin County, and the rest of North Carolina and the US, okay? So we'll do a little bit of a deep dive on this and just to help understand what's going on with CFAP and how it could help you and what kind of payments will you get for this program, okay? And then I'll touch on some of, the traditional Farm Bill commodity program updates for ARC and PLC. I'll try to go over, review a little bit what those two are, and then sort of look at what we need to do essentially to sign up for this next round for 2021 moving forward, okay? And then I'll talk a little bit, touched on some of the disaster assistance programs that are out there from FSA as well. So just to let you know that these things are out there that potentially could help out as well moving forward in terms of managing risk. And also touch on a little bit on sort of some of the updates in crop insurance. I'm not going to go through the basics of crop insurance and so forth. I think that's not very interesting at this moment. So I'll just talk about some of the things that are sort of, I think, are interesting conversation you could have with your crop insurance agent before next season to talk about the different kinds of things that came up recently from the risk management agency. So that's what I plan to cover today, okay? So, as you know, it's unprecedented times. There's new quote unquote risk that affected agriculture on top of the traditional, droughts and hurricanes and those kinds of things that affect agricultural production. So we had a trade war a year or so ago that started. We have this pandemic right now. These are sort of new quote unquote risk that our current safety nets that was designed in the past wasn't really sort of designed to tackle, okay? So given these new risks, really there's been increased reliance on sort of ad hoc new government safety net programs on top of what we already have in terms of crop insurance and sort of the commodity programs and disaster programs that's been out there for several years. So for example, that MFP, that market facilitation program from the current administration, was aimed to address some of the trade war risks. And then the CFAP, as you know, would then help some of the market disruptions caused by the pandemic. Okay. This is not ideal, as you know. You'd rather earn the profits through the markets, right? But these, as I've said, are unprecedented times, and so what I want to do today is really inform about the programs, the safety net programs out there that hopefully help your bottom line as we go and move forward in the next season. Okay. So, as I've said, let's do a little bit of a deep dive on CFAP. So this is the Coronavirus Food Assistance Program 2.0. So in late September, USDA announced up to an additional $14 billion for CFAP 2.0. This is on top of the approximately $10 billion that has already been paid out for the CFAP 1. So the CFAP 1, if you recall, these came out in May, and essentially some of the payments that are calculated for CFAP 1 were based on sort of data prior to the January 1 sort of 2020 date. Okay, so some of them are based on 2019 payments and so forth, or production rather, 2019 production. So CFAP 2 really is for, was designed for those that are continuing to face market disruptions because of COVID. And some of, or I guess most of the payments actually are based on the planted acres that producers have for 2020. So essentially it's trying to estimate sort of the losses producers have for the 2020 crop year and sort of estimate the losses due to the pandemic and sort of base payment on those. Okay. Important stuff. Sign up period is from September 21st to December 11, 2020. Okay. But as I've said here, sign up as soon as possible. I hope some of you folks have already signed up with FSA. The expectation is that funds will go fast, and sort of the idea is once you apply, the county will process it, and then as soon as the county processes it, you'll get the payment as soon as possible. So compared to, I'll talk about this later for ARC and PLC, compared to that program, I'd recommend that you guys sort of talk to your FSA folks already and sort of sign up as soon as possible for this CFAP 2.0, okay? Okay, so you're applying with the Farm Service Agency. As I mentioned, there's an online version where you could apply online. There's a manual sort of handwritten version where you could sort of download a PDF file and fill it out and submit it. And then there's also Excel spreadsheets that already sort of automatically, well, once you plug in the information unique to your operation, it'll calculate the payments for you, and you could submit those spreadsheets as well. It's one application for all commodities that are eligible in your farm. So it's just sort of a one-stop shop, so to speak. And of course, you could go into your local county FSA office, talk to your FSA, your favorite FSA agent, and they will help you fill out these sort of applications. Okay, and I'll talk about this again at the end after I sort of talk about CFAP 2.0. Okay, so the program is based on self-certification. It needs info on the 2020 planted acreage, but you don't need to submit sort of formal records. You just need to report it. But if you get audited, you have to show the records of the planted acres that is consistent with what you reported. So that's sort of the only catch here, but you don't need to submit any records of planted acres for 2020 per se at the time of application. Payment limits are always there for these kinds of programs. So it's 250,000 per individual or entity. It can be increased. There's special limitations, I guess, or special conditions for it. So for corporations or LLCs, if there are two sort of family members operating that contribute more than, I think, 400 hours to labor and management, you could increase it to 500 or 750,000 per entity. So for per corporation or LLC, but typically per individual, it's 250,000 payment limit, which is better than the commodity programs, which is, I think, 125,000 is the limit. Okay. So there are 3 payment categories for CFAP, for 2.0 in particular. So the first one, which I think majority of you guys will probably be in, is this price trigger commodities, or this is the payment category, price trigger payment category. So these are commodities meeting a minimum of a 5% decline from January to July, as established by FSA. So FSA has already established this. And so row crops, corn, soybeans, wheat, cotton, are typically what they call price trigger commodities. Livestock, cattle, hogs, poultry are typically price trigger commodities. And dairy, okay, are price trigger commodities, okay? The second type of payment category in CFAP is what they call flat rate commodities. So these are the commodities that FSA establishes that does not meet the 5% price drop criteria, or there's just no data for it. So alfalfa, canola, hemp, millet, oats, peanuts, among others. I didn't list it down, but it's in the FSA website. But these are sort of examples of what they call flat rate crops, okay? And then there's the sales commodities category. So this payment is based on sort of a sales approach. So essentially, this is one of the few categories where it's based on 2019 sales, not 2020, okay? So fruits and vegetables, tobacco is here, nursery. If you're into sort of specialty livestock, you know, elk, buffalo, beefalo, those types of things, they're all in this sales commodity category for the payment. So I'm thinking most of you folks are in the price trigger commodity row crops, so I'll start there. CFAP 2 for row crops, for corn, soybeans, wheat, cotton, and the like. So these are the price trigger commodities. And here is the formula, okay? So there is an effective payment rate, okay, EPR, multiplied by your 2020 actual production history yield that you report to your crop insurance agent. So this is based on your crop insurance coverage. And so that will determine the price per acre, the payment per acre for this category. So the EPR, effective payment rate, is established by FSA. So we can't do anything about that. This is based on a crop marketing percentage that they estimate to be completed. And then a payment rate that they established based on the price decline that they estimated for, say, corn, soybeans, or wheat from January till July is the idea, okay? And then, as I've said, the APH is based on your crop insurance. If you don't have any crop insurance coverage, they will use 85% of the ARC-CO. ARC-CO is that commodity program for, so each and every county has an ARC-CO yield. 85% of that is what's used for APH if you don't have insurance coverage, okay? And so that will be your payment unless it's lower than $15, okay? So $15 is sort of the price, the payment floor. If the payment trigger calculated is below that, you'll get a flat $15 per acre payment rate for your row crops, Okay, so that's the price floor for this category. Okay, and so the total payment that you'll get is essentially that price trigger payment times your planted acreage. That's the eligible acres that you report. Okay, so that's sort of how that price trigger payment per acre or total payment for that category is calculated. Okay. So here's some of the data for crops: corn, soybean, wheat, cotton. So as I've said, the payment rate is based on a price decline. So they estimated a 73 cents price decline from January to July. 80% of that is 58, right? And then they expect 40% of production to be sold by year end. And so the effective payment rate for corn, for example, is around 23 cents per bushel. Okay, so the same logic applies for soybeans, wheat, and cotton, and these are essentially the effective payment rate per bushel or per pound for cotton. Okay. So just an example for Franklin County, say you have 1,000 acres of corn, 1,000 acres of soybean. I took the NAS county averages, for example, for corn yield and soy yield. So for Franklin, it's around 115.5 bushels per acre, I think, in the last 5 years. And APH for soybean yields is around 33.4. And so here's sort of the total payment that you get for this example farm, right? So again, the effective payment rate from the previous slide is 23 cents per bushel. If the APH yield is 115.5 for corn, you just multiply that, you'll get a $26.56 around that area payment per acre. And so if you have 1,000 acres, you'll get 26,000 in payment for corn. For soybeans, payment rate is 31. APH yield is 33.45. If you multiply that, it's just 10.36 or 10.37. So it's less than the $15 sort of payment floor. So essentially, you'll get the $15 flat payment in this case. Add that together, that farm will get a grand total of around $41,645. Okay. Warren County, the yields are a little bit lower, so 108.5. I think these are the 5-year averages. Same logic, right? But again, the same. Oh, sorry. Same thing. Multiply the payment rate times the APH yield. 24,000 for corn, 15,000 for soybean because of that that payment rate below the flat rate of $15. So you'll get again around $40,000 total payment for total 2,000 acre corn and soybean operation. So I'll pause here a little bit if there's any questions, I guess. So this is how sort of the payment for corn for the major row crops is going to be for CFAP2. So if there's any questions at this point, I'll be happy to try and answer.
Rod, I hadn't seen any pop up in the chat box, so I think you explained it well.
I hope so. It's one of two things, right, Matthew? It's either it's clear or it's totally not clear. But as I've said, we'll try. If there's any questions that pop up, let me know, and we'll try to clear it up towards the end. Okay. All right. So that's for row crop. So I think majority of the folks here would probably be in this category for the CFAP2 payments for row crops. Okay, but if you are one of those that have the flat rate crops, so alfalfa, canola, hemp, peanuts, oats, etc., essentially the payment rate is very straightforward. It's that $15 per acre. So it's just $15 per acre times your APH yield, and then whatever your planted acres is for some of these crops, you'll get that total flat rate payment. Okay. So note, I haven't mentioned this, but there are crops that are ineligible. So hay, except for alfalfa, crops for grazing, clover, vetch, etc., are not eligible for CFAP 2.0. And then when we get to livestock, there's still also some livestock that's also ineligible. Okay, so this is fairly straightforward. So I didn't put an example here, but it's just $15 times your APH times your eligible acres, and that's it. So it's $15 for the flat rate. So it's fairly straightforward. All right, for livestock and poultry. So eligible commodities: beef cattle, hogs and pigs, lambs and sheep, broilers and eggs, and dairy are eligible for CFAP 2.0. Okay. So these are the ineligible ones: equine, animals raised for breeding stock, okay, companion comfort animals, pets, etc., are not eligible, and also contract growers that doesn't share in the price risk for the commodity, okay, or is also not eligible for CFAP 2.0. Okay. Okay, so let's start with beef cattle, hogs, pigs, and lambs and sheep. Those are in one category for CFAP 2, and it's essentially based on your highest owned inventory on a date that you select from April 16 to August 31. Okay, so you could look at your records, what's the highest inventory for that period, and just multiply that directly by the payment rate, and the payment rate are established by FSA, and here are sort of the payment rates for these commodities. So $55 for cattle, $23 per head for hogs and pigs, and then lambs and sheep, it's $27. So it's the payment is very straightforward. So if you have like 100 beef cattle heads, that's the maximum inventory you have. So you'll have 5,500 in payments. Okay. Broilers is one of those that are based on 2019 records, essentially. So it's 2019 broiler production times a $1.01 per bird payment rate. So again, it's fairly straightforward. This is established by FSA. And then say sort of the same logic for eggs, but here are sort of the payment rates for eggs if you're into production of eggs. Okay, so the pertinent record here is the 2019 production rather than the 2020 acres for planted acres for row crops. Okay. Dairy, I don't know if there's any dairy folks here, but it's based on milk production in 2 periods. So the actual production from April to August, and sort of an estimated production from September to December 31st, where FSA essentially will establish or estimate this production at the second period. Okay. Some of the dairies that have closed will still be sort of eligible as long as they could show sort of commercial production before they close. Okay. All right. So those are for livestock. The last category, or no, yeah, the last category for the CFAP 2.0 payments is for fruits and vegetables, tobacco, and some of these other specialty livestock crops. Or specialty livestock, sorry, not specialty livestock, okay? So these are based on sort of 5 payment gradations, and it's based on the, again, 2019 sales of this commodity. So the pertinent records is sales records for 2019. And so these are sort of the 5 sales ranges. So you'll get a payment factor for the first 50,000 between 50 and 99,000 dollars of sales. You'll get 9.9, and so on, 9.7, 9.0, 8.8. Okay. So for example, so say your sales of tobacco totaled $75,000 last year in 2019, and you have records to support that. Here's how that payment is for this sales commodity payment category. So the first 49,000 will be based on the 10.6%. That's 5,300. Then the remaining 25,000, so the 75 that you get less the 49, will be based on the 9.9%. So you'll get the 2,475 for that sales category, essentially. And so the total will be 7,775 for this particular example. But if you have sort of sales greater than whatever, 500,000, it'll go on until you get to the category where your sales is at. Okay. Okay. As I've said, I can't emphasize this enough. Sign up as soon as possible. December 11 is the deadline for signing up. Here's the key website for FSA. So as I've said, you could apply online if you have I think if you have a what they call an Authenticate sort of account. You could download PDF files and manually complete it by hand and then submit it to your FSA office. You can do that. You could go to your county office, okay? Talk to your favorite FSA agent and he or she will help you fill out the application. Or you could download as well. This is an Excel file over here. If you go to the website of FSA, and then it'll prompt you to put in your information, and it'll calculate your payments automatically. Okay, so December 11 is the important date. But as I've said, if you haven't done it yet, I recommend going and calling FSA as soon as possible, because as I've said, the intent is each county will process applications as they come, and it will take, it depends on the county, I guess, how fast they process it. But after they process it, it should be that you'll get your payment as soon as possible. Okay, soon after it gets approved, essentially. So I'll stop here again and pause if there's any questions on CFAP 2.0 in whatever I sort of discussed so far.
If there are any questions, we've got a small enough group. Just unmute yourself and feel free to ask.
Yes.
That none have popped up in the chat box so far. So like I said, you're doing a good job.
I hope. All right. So if there's no question, let's move on then. Okay. All right. So the next topic I want to discuss is ARC and PLC, and I hope you still remember these, because you should have signed up earlier this year for the 2019 and 2020 enrollment for ARC and PLC. ARC is the agricultural risk coverage. PLC is price loss coverage from the 2014 Farm Bill and Title I of the Farm Bill. And so the 2018 Farm Bill reauthorized these, so it continued on from the 2014 Farm Bill, so it's still available to eligible producers. So if you recall, just a quick review, ARC offers revenue protection, okay? And there's two flavors of ARC, ARC-CO, or ARC County, they call it, or ARC-I, ARC Individual, okay? So these ARC-CO makes a payment based on 85% of your base. ARC-I is based on 65% of your base. As such, historically, nobody in North Carolina has signed up for ARC-I. And so I'm just going to ignore that. Okay. So typically people in North Carolina sign up for either ARC-CO or PLC. Okay. And even in other states, even in the Midwest states, there's a small percentage of folks that sign up for ARC individual because of this lower payment sort of rate on your base acres. Okay. In contrast, PLC is price protection. So this is just the straight sort of price. If you get a marketing year average price below the legislated effective price that Congress set in the 2014 or 2018 Farm Bill in this case, then you'll get a payment. Okay, so this is sort of price protection. It doesn't have anything to do with yield. So these are the essentially ARC-CO and PLC are the two main programs. And these are the two main disaster or commodity programs that our farmers in North Carolina sign up for. Okay. So important enrollment information. Again, similar to CFAP2, you have to enroll. Need to enroll every year for each crop year. So here are the enrollment dates. So 2019, it was the March 15 earlier this year. So it was delayed because of the Farm Bill wasn't approved till late 2018, right? And in 2020, it was June as well, okay? But the important thing going forward is this one for 2021. So it starts now, October 2020, through March 15, 2021, okay? So that's sort of the period that you could enroll for either ARC or PLC. So you have to choose. So in the 2014 Farm Bill, if you recall, it was a one-shot election, essentially. In 2014, you either choose ARC-CO or PLC, and that's your program for the rest of the Farm Bill till 2018. A lot of people didn't like that because you're sort of essentially picking a program that's sort of based on 5 years, 5 years of returns. So they changed it in the 2018 Farm Bill. Your choice, because the Farm Bill was delayed, you had your one choice for 2019 and 2020 that you've already made. So the different thing is for going forward, you'll have the chance to choose every year for 2021, 22, and 23. So you're not locked in. So you could choose PLC in 21, shift to ARC in 22, back to PLC in 23 if you want to, okay? Or the other way around, right? ARC, PLC, then ARC or something like that, or PLC all the way, or ARC all the way, right? So it gives more flexibility. So that's the good thing that came out of, one of the good things, I guess, from the 2018 Farm Bill in Title I, that you have the flexibility to choose either ARC or PLC each and every year. But you have to enroll again. So for example, in 21, by March 15, 2021, okay? So the choice between ARC-CO, this is ARC-CO and PLC, okay, depends on several things. So of course, it depends on your expected returns, okay? We know what the ARC-CO payment structure is and the PLC payment structures are. So your choice will depend on how you see prices and yields unfold in 2021, for example, okay? So, and that's kind of hard, really. So it depends on probabilities and all that kind of stuff. So that's why there's decision tools out there, which I will discuss later, that helps farmers to sort of pick and sort of just envision based on what we know right now, what's the expected behavior of price and yields in say 2021 or 22, and then that will help decide whether you go ARC, CO, or PLC. So for example, if you know, or you're confident, I guess, that say price of corn in 2021 will be $3, let's just say, right? The reference price for PLC is $3.70. If you're fairly sure that will happen, PLC makes sense, right? For you, because you won't deal with the yield aspect of ARC-CO, and you're pretty sure that ARC PLC will be below the reference price, that 370 for corn, for example. Pick PLC in that particular case. Okay. Another consideration when picking is coverage. So as I've said, ARC-CO is a revenue protection sort of program, and PLC is a price protection program. So for revenue then, it's determined by both yields and prices. Okay. So for ARC, both will determine whether or not you'll have a payment. Okay. There's caps and limits. For ARC-CO, it's 10% of average county revenue. PLC is the loan rates. Typically, you'll hit the ARC-CO limit fairly quickly, essentially. But if you have lots of acres, you won't hit the 125 as quickly as PLC. So that's the only thing with this thing. So there's a payment limit that 125 in total, but there's also sort of like a per dollar acre payment that's a limit. So typically you'll hit these payments easier, or the 10% easier, so you'll get more acres covered compared to PLC in this particular case. Okay. And also it depends on your preference for SEO. That's the shallow loss coverage with crop insurance. If you want to purchase that SEO, you can't do it if you choose ARC, but you could choose it if you choose PLC. Okay. Now, compared to that CFAP2, I mentioned earlier, for CFAP2, please sign up as soon as possible. And my FSA friends won't like me for this, but for ARC and PLC, wait near the deadline. That's my recommendation. A lot of my FSA friends don't like me saying that, but it just reduces uncertainty. That's the important thing here. So for example, in the 2021 sign up, the deadline is March 15. Okay. And so if you sign up now, you don't know sort of the marketing average, the marketing prices for January, December, January, February, and so forth, right? But if you sign later, you'll have more information about those prices. And those prices determine the marketing year average price that triggers payments for PLC, for example, okay? So you'll have more information if you wait till near the deadline, okay? That's the idea with this recommendation, okay? Again, FSA doesn't like that because they want to process these enrollments as soon as possible. But I believe it's in your best interest to wait a little bit, maybe at least February, to sign up, because you will know at least what were the marketing prices for November, December, January by that time. That's more information as compared to if you signed up now. Okay, you don't know the marketing year or the September prices, for example. It's the only thing you know. Okay, so that's the one thing compared to CFAP that I would recommend for ARC and PLC. As I've said, there's really one of the main considerations when picking ARC-CO or PLC is your this expected returns, and it's hard to estimate. There's two tools out there, an Illinois and a Texas A&M tool, and here are the websites for it that you could sign in. The Illinois site focus more on the row crops, corn, soybeans, the major row crops, corn, soybeans, wheat. 5-year payment, they give 5-year payment estimates using 1,000 model sort of runs that they do. And A&M is more comprehensive. It has peanuts and sorghum and all that kind of stuff, but it only gives 2-year payment estimates. So me being an Illinois alum, I recommend Illinois for now, I guess, in terms of using these tools. Though, if you have peanuts or something like that, of course you have no choice. A&M is the other decision tool. Okay, I don't have time to go in and sort of demonstrate how these work in detail, but perhaps maybe this is something we could discuss, and Matthew or Martha could invite me again in January or February. We could look at this again to help you in your decisions for ARC versus PLC in March. But here's an example of sort of an output from the Illinois decision tool. So I put in North Carolina, Franklin County for corn. The forecast model, they have sort of put a COVID thing here. So there's other traditional forecast models, but this one they say sort of accounts for the COVID pandemic right now. I put in again the average from NASS that I found for corn in Franklin County, 115.5. And as you could see, it gives 5 years, 1, 2, 3, 4, 5 of expected sort of payment estimates. So for 2019 payments, this is about done. You'll get your payments, or you should have gotten some of your payments. Maybe some folks have received it already, perhaps. This October, starting this October, I think. So if you pick PLC, the expectation is around $20 per acre, 93% likelihood of payment. So if you have ARC, it's 100%. More than likely, you'll get around $40 in payment. Again, assuming if my average here is consistent with yours. And the reason for the larger ARC payments really is this yield from NASS that they expect for 2019 in Franklin County. It's fairly low, okay? And I guess I'm not informed actually what happened this year for corn in Franklin County, but that's what they're saying the yields from NASS is going to be. So since ARC is based on yields and prices, that reduction in actual yields for the county resulted in the higher ARC CO payment for 2019. For 2020, as of, I guess this is the data that they have from June still, some of the expected actual yields that they have based on current data is above that average that we have from NASS. So the expectation then for 2020, 21, 22, 23, PLC will pay more than ARC. So based on current information from this decision tool, it makes more sense, for example, to sign up for PLC with a 71% likelihood of payment of $42.54. Okay, so this is how that decision tool will look like for in that Illinois decision tool. Plug sort of the same information for Warren. Again, the yields are a little bit lower, but look at the 2019 payments for ARC and CO. It's a little bit lower. $18 is the same or fairly similar. Around $20 was the one for Franklin, but the ARC is lower. Okay, the probabilities are also sort of lower. So, and that again is a function of this expected yield for 2019. So if you pick ARC CO for 2019, the likelihood of payment is low, and if you do get a payment, it's likely lower than PLC. But for the 2021, again, 22, 23, or at least the 2021, this is the important thing for now. Again, it looks like PLC is sort of the choice for 2021 as of today. Okay, this could change by January or February. Okay, so that's how these decision tools look like for in terms of helping decide whether or not to sign up for ARC or PLC. Okay. So that's all I have for ARC and PLC. Again, I'm going to pause if there's any questions at all for ARC and PLC. So again, the deadline is March 15, but as I've said, I recommend you wait till closer to March 15 to sign up for either ARC or PLC. Any insights here, Matt? Why it's did Franklin County or Martha 74.2 is what they're expecting for?
Well, last fall we had quite a long dry spell come August and September, so that really wouldn't have effect on the yields. I wouldn't think that much, but it's corn yields last year and beans were too. They were very spotty as to which fields they were in. So
okay, so because that's what they're sort of seeing here from NAS, looks like.
Right, and same in Franklin.
Okay.
Right.
Okay.
Mm-hmm.
Any questions on ARC and PLC?
there's none in the chat box, so like
Okay.
we have been doing, we're good to go.
All right, so I'll move forward. Okay, so I think I have around 12 minutes, so I'm just going to breeze through again some of these other FSA administered programs that I think at least folks should know that's out there, and you could again visit your favorite FSA agent and talk about it with them. So there's for livestock folks, there's a LFP, Forage Disaster Program for grazing losses. LIP, Livestock Indemnity Program for death losses due to sort of natural causes. And ELAP is there also for livestock, as long as it's not covered, losses not covered by either two, it's covered by ELAP. And then NAP, if you have sort of crops that are uninsurable by RMA, you could use SNAP. This is structured as a yield crop insurance. And also there are others out there. I forwarded sort of a FSA brochure to Matthew, I think, that you could share, Matthew, to our audience here if they want more information about the different FSA programs. And this is free. Well, except for NAP, if you want to buy up, so to speak, a higher coverage. So these are good things to be in your risk management portfolio, so to speak. Okay. Again, talk to your FSA agent, see if they can help you in terms of any of these things if you qualify. One thing I want to note is this WIP Plus. This is only for 2018, 2019 losses due to hurricanes here in this part of the world. It's also for losses due to wildfires, but I don't think that's more on the West Coast. But so if you had some 2018, 2019 losses due to hurricanes and you haven't signed up for this WIP Plus, this is one other thing that you could sign up for. Okay. For crop insurance, actually, there's nothing really new. So again, if you recall, there's either you typically farmers in North Carolina pick revenue protection, RP, or yield protection, with majority picking revenue protection insurance throughout the U.S. That's sort of the common choice. There's nothing really new in those policies except for this. They called it an enhanced coverage option for 2021. Okay. This is, again, a shallow loss program akin to SEO. So if you buy crop insurance, right? So say if you have a 75% coverage level that you pick, the 25% is your deductible, right? So SEO will cover that deductible from 86% till that 75%, if you chose 75%. ECO, this new one, will cover from 95% till 86%. So that's sort of an additional layer of protection. It's not free, so you have to pay for additional premiums if you want that coverage. But that additional shallow loss coverage will be will be available for 2021. Okay, so this is, again, as I said, there's really nothing new with crop insurance except for this for RP and YP. So this is something to talk about when you talk to your crop insurance agents in the next month for the 2021 crop year. Okay. For livestock folks, I don't know if you've heard of this. I mean, it's been around for a while, and a lot of agents have been sort of pitching this to livestock folks for maybe the last couple of years. This is just something, again, to consider. The PRF program, it's an area-based plan. So meaning it's not based on your actual losses or actual grazing losses. It's based on a rainfall index. So you pick sort of certain months to insure for in a year. And then if a rainfall index for your area falls below sort of a historical average, then you'll get a payment. So again, the idea here is that there's no reliable grazing sort of loss data for which to structure an insurance program like RP and YP. So they came up with this sort of rainfall index based PRF. I recently reviewed this program for RMA. There'll be something new maybe coming up, some changes with it in the future, but historically, it has been good in terms of, paying out when you have low rainfall that affects your forage, okay? So these are, again, if you're gonna talk to your crop insurance agent in the next few months, these are what I would suggest you could talk to them about it, especially if you have sort of a grazing land for PRF, okay? So just the take-home messages, as I've said, sign up for CFAP 2, contact your favorite FSA agent, sit down with them, sign up for sure as soon as possible for this CFAP 2. As I've said, the intent is they'll process it as fast as they can, and you'll get payment as fast as they approve it, okay? And if you're going to talk to your crop insurance agent for next season, you could discuss that ECO, that shallow loss, additional shallow loss protection, whether it makes sense for you. If you have the RP, the revenue protection, it will cover part of your deductible. Or if you have livestock, that PRF may be something to think about as well. Okay. So that's all I have, Matt. Feel free. I mean, if you don't want to ask questions in the webinar, you could email me, call me, or what I'll also do is post this presentation in our website in ARE, and let me know if there's anything I could.
I have a question. This has been great. Excellent summary. This is Martha and Franklin. But how about if you plant corn or triticale, a small grain for silage, and you harvest the silage? Does that count for any of these payments other than grain?
Let me check. I mean, I'm not sure. I mean, it should be in that list. I think it should. I didn't see silage. Let me see. I'm looking at the CFAP website here. Let me see if I'll put search silage here. Just give me a second. No, it doesn't say, so I'm not sure. That's a good question.
Can you find out and get back with us?
I'll certainly can. I'll try to find out.
I have also been disappointed. I've had bought that insurance for rainfall guesstimate for forages, and I have been. It's about break even. It's so much of a gamble of when you're supposed to estimate when it's going to rain for the following year, rain or drought. You know, last September, like Matthew said, August, September, we were in a little drought. This September and August, rain. So it's a lot of gamble, and I hope you can help the administration correct some of this, so we're not gambling with our money of when it's going to rain and when it's not. Can you address that?
Right. So, I mean, that's the nature of the beast, unfortunately. So, as I said, this is an index-based insurance. So this is sort of the thing I'm sharing right now is that decision tool from the RMA website, right, where you have to essentially pick. And, you know, I hear you, Martha. A lot of people that I talked to said this is sort of one of the Las Vegas policies that that RMA has, because it really, you know, it depends on the rainfall. It's not dependent on your particular operation, the way you manage it, right? So, for example, here, you know, I just put whatever 10% in January, February, March, April, May, June 30, July, August 30, September 10. But say you put 10% here in September, October, and this is where that drought hit, right? You won't get a lot of payment because you just allocated 10%, right? So unfortunately, that's sort of the nature of this PRF thing. So the one thing, again, what I could recommend is so that you could spread it out in all the intervals, is one recommendation. Or if you have sort of strong historical historical performance doesn't naturally predict what will happen in the future. But if you know that drought in Franklin hits most of the time in July, August, you could increase this allocation that you have for your liability in PRF somewhere here. Again, unfortunately, that's the nature of this product. It's not based on your individual performance. It's just based on a rainfall index in one grid for which your land is in.
But I'd like to talk to you more about that and some of the changes that you're working with them to make for the future. I have some ideas.
Sure. I'll be happy to.
Well, Rod, I do want to thank you for being with us this morning. You shared a wealth of information. A lot of it was very useful. And I think one thing everyone needs to take away from this, I know Rod's mentioned it many times, is have a good relationship with your FSA office. And they can really, whether you need them right now or not, they might have a program later on down the road that could really benefit you. And so
when I tell folks, it's give them a fruit basket or something.
That's right. That's right. With that, we're about to run out of time. So if, like I said, I want to thank Rod again. If y'all have any questions, feel free to contact him or either contact me or Martha, and we'll be glad to get the information to him. Also, I've recorded this as well as the other presentations, and I'm in the process of making a resource page where all the recordings will be available. And we'll send that out to you here shortly. But I do want to thank everybody for joining us this morning. Thanks again, Rod.
Thank you.
Thank you. It's been